It's going to be a big week ahead with local inflation data out, and of course the Fed, ECB and BOJ all meeting. So let's get some colour on what to expect. Pete McGuire, CEO of XM Australia, joins me now. Pete, thank you so much for dropping by today. Really appreciate it. Fair to say it's going to be a fairly big week in global markets.
Absolutely, Kyle. Good morning. Yeah, strap yourself in because I think it's going to be wild and woolly. Let's see where the Fed rolls. I'm not expecting a lot from Japan, and jury's out a little bit as far as ECB. So could be quite a volatile footprint for currency traders. And the last couple of days haven't disappointed either.
Indeed. What about the Fed? I mean, is there a chance that we could see something of a signalling of an end to the rate hiking cycle?
I think so, definitely. I mean, we get a 25 this week, and that's pretty much baked in. And then everyone's saying, well, that'll be the end of the hiking cycle for 23. Jury's out a little bit in the sense where you would get one maybe if we get an uptick as far as inflation again, then you could see something in later in the year / October, November. But we've just got to wait and see and keep a close eye on energy costs for that one to materialise if it did. So I think this time next year you'll probably see a couple of cuts, and 24 could be a pullback, and this is where we're looking as far as that macro view over the next 12 to say 15 months.
The US dollar seems to be weakening a bit, so you reckon the market's maybe pricing in that the Fed's job is done?
I think so, though. US dollar really came under some pressure last week as we discussed together. 99.6 I think was the downside as far as how low it went. And it's bounced considerably since then. I'm just looking at, it's back above 101. So it's been dynamic for currency traders over the last, say, 4 to 6 sessions. It hasn't disappointed at all. And euro back at that 1.11. I'm looking at the yen at 141.6. So, been very choppy, wild, volatility. And really, that's what every trader's after. I mean, if you didn't get on the trade, a couple of hours back, don't worry. There'll be another opportunity in a couple of hours' time, Kyle.
Yeah, definitely. A few central bank meetings and events to keep an eye on. But let's talk a little bit more about just perhaps the inflation pulse at the moment, because, I guess that's what everyone's going to be looking at when it comes to whether the Fed has the ability to slow things down. And I guess the markets are reasonably optimistic that maybe things could, or the inflation rate in the US could get back to target fairly soon.
Well, you would hope so, but I'm just, I made some notes to come on the show. Core inflation more than double what the Fed's at the current time, double what their 2% target is. So, that's their objective. It's going to be a long, slow process unless it was to crash very, very quickly. So it's just a work in progress. Let's see where the next couple of months goes. I think it's offering much excitement from a trading perspective as far as currencies, commodities, and stocks. So I don't necessarily think it's a bad thing. I think it's a good thing, that slow unwind, Kyle, and it ratcheted up quickly, and to pull it back to 2%, it's just it's a work in progress. We've just got to see where that funds rate policies mindset is, dot plots, and all of those intriguing things that make a trader's day enjoyable.
Yeah, definitely. And I guess we'll get some potentially more enjoyment from the ECB this week. Christine Lagarde's remarks, I suppose, we'll be listening into carefully.
Yeah, exactly. There's a couple of members that have got a different viewpoint compared to the body of the ECB, and they're pushing back. Yeah, we've just got to see where Lagarde's comments are for this week and whether you see a September rate hike. So, again, it's a little bit of a flick of the coin at the moment. There's a big pushback as far as to see that September hike, and there's others that are saying that they want to see it. So it's, whether we're at the end of the cycle. Everyone's saying you'll probably see 2 more rate hikes this year and then 3 cuts next year. So from where it is at the current point, it'd be 25 points lower than this at the end of next year. That seems to be the consensus. We've just got to see if that materialises.
Yeah, definitely. Plenty of room for surprises, I suppose, as well. But what about the Bank of Japan? That'll come through in the Asian session, obviously, at the back end of this week. We're all talking about whether they could change yield curve control policy. Do you reckon Ueda will perhaps comply or maybe push back a little bit on those expectations?
Well, I think his current statements have been and remarks have been likelihood of no action. and he's conscious that the importing of expensive goods really is an impact to their domestic economy. And he's really, it's been very choppy, that euro. We were up at 145, then it went down to, then 137, 138, back around 141 at the moment. So, yeah, incredibly choppy. And I'm not expecting anything from Governor Rodda at the moment. We'll just have to see how the Northern Hemisphere, the Japanese summer treats the economy, and from a tourism perspective, and whether you've got an uptick as far as inflation later in this cycle. We're just it's a wait and see, Kyle.
Definitely is. And I guess this week for us locally, it'll just be those inflation figures, because it'll be fairly important, I would imagine, to whether the RBA goes again in August next week.
Yeah, exactly right. They're coming out Wednesday. I'm making notes of that. And last Thursday's unemployment data or employment data was probably a little bit better than what we expected. So that's always a good sign. And then we've just got to see where we run with the CPI numbers out on Wednesday. So again, the Aussie's been choppy. You're running it around about, 67.25. It's been up and down and all over the shop. So it keeps to be in that range, channel trading. But again, big moves. They're quite explosive when you look at it from a chart perspective. So yeah, that's how you make money if you're going to trade short-term trading timeframes and these sort of instruments, Kyle.
And I saw too that you've got a bit of an eye on the pound Canadian dollar, which is maybe not a pair that everyone makes a foray into, but perhaps an opportunity there.
Yeah, it's certainly been wild. It's certainly been, that's the beauty of these cross rates. And I'm conscious where the BOE is, conscious as far as, the Canadian situation. And it's had some nice leg ups there. And I think you probably see, another opportunity. And that's the beauty of these cross rates, because, they're not just everything against the US dollar. There's literally probably 100 or so that you could trade. And it's very, very, I suppose, enticing to traders, because they're open 24 hours a day. The markets are deep, and there's plenty of movement, Kyle.